Aloha, my name's Amanda from UT-Do, and in this video I'm going to explain the tax requirements of Airbnb. At the end of the year, by January 31st, you'll receive a Form 1099-K, and what this form is for is third-party processing payments, and that's what Airbnb is, their third-party payment processing service. So they're reporting on that form the total amount you receive throughout the year, and they also file a copy with the IRS by the end of February. If there's a mistake in the total amount they reported to you on that form, you want to go back to Airbnb and have them correct the form because there is a copy filed with the IRS as well. Having a room rental on Airbnb is treated the same as a rental property. And that means that the activity is considered passive income, passive expenses. There's basically two types of income. You have your worker income from being an employee or self-employed, contractor, or small business, and that's money you actively work for. Alternatively, you have passive income, which is often, investment income. The taxes are a little different in that you don't have self-employment taxes on that income, such as Medicare and Social Security. Now, on the flip side, it is not as easy to deduct a loss from passive income. In general, passive income losses are only deductible from other passive income. Now, that being said, you might say, well, why would I have a loss? Well, with your rental property, you report all the income and then you take deductions for all of your expenses. Anything directly related to the room that you buy, such as linens or decorations, remodeling, that can be directly deducted if the room was only used for the rental property. Other than that, it's prorated for the time it was used for Airbnb. Then you also get to take what's called indirect expense, and those are expenses for your entire home. And you'll take a percentage of those based on the size of the areas that you are using for Airbnb and the amount of time throughout the year that they were available for Airbnb. Most softwares for calculating taxes account for all of this. It can also be accounted and tracked as you go in a simple spreadsheet. Also, if you only rented the room for 14 days or less, you actually do not have to report any of it for taxes. And of course, there's no deduction either. Another big deduction that can sometimes put people in a loss situation when they didn't know that they would be in a loss is if you own a home, you get to take depreciation on the home. And that's basically deducting the cost of the life over 27 and a half years. So the Schedule E reports the income from Airbnb minus the related expenses. If you have multiple rental properties or multiple Airbnb properties, you would list them separately. In order for a loss to be deducted, you must be what's called a real estate professional. That's an exception to the passive income no loss requirement, and instead it's treated like worker income and you are allowed to take a loss deduction. To qualify as a real estate professional, there are two main criteria. One is that you worked in the real estate activities more than any other business. And the other is that you worked more than 750 hours in the year in real estate activities. Now, with both of these requirements, you must have also materially participated in the business. And I cover material participation in another video I have, materially participation. So check that out. But basically it requires that you were the main worker and you actually worked extensively in the business. So that can be a pretty difficult qualification to meet, and it can be a red flag for IRS audit. That's not saying you shouldn't take it, but you should be certain you qualify and have losses in that situation. Okay, so assuming you don't qualify as a real estate professional, which most people doing Airbnb would not, you probably have a full-time job, but you do put in time and energy on the website, talking to guests, etc. In this case, you probably qualify for the second exception in order to deduct a loss, just in case you do have one. And that exception is active participation. And active participation is a pretty loose qualification, loosely defined by the IRS, and it basically means that you're involved in management activities and you have the final say in regard to them. So if you even say have a separate rental property and you hire a management company, you can still qualify if in your agreement with the management property it clearly states that you maintain the final decision making. So with Airbnb, if you're not hiring any management company or anything like that, and you do Airbnb in a room in your home or even in another property, you would qualify under the active participation because you're handling everything and making all decisions. So if you do end up with a loss, you would be able to deduct it from other income. Otherwise, there are taxes, but it's not as much tax as if you were self-employed. So Airbnb can be a really profitable endeavor, and I've really enjoyed doing it myself. Now, if you have a state that taxes, which most states do tax real estate activity, then be sure to check out what your state tax requirements are. And I have a video I made for Hawaii state tax requirements. And if you have any questions about your state, feel free to ask. Thanks for watching, and let me know if you have any questions below. Have a good day.